Hello SkyTraders, welcome back to your weekly recap video in which we analyze market and study price action over the week. This is Mina, your trading coach, and today we're going to study the Euro dollar and Bitcoin dollar. So let's get started. First of all, I identified my trading range. It's around 300 pips trading range from the area of 1.02 to 0.99. And remember that we're currently trading in a psychological level, which is when 1 euro equals exactly $1. So we can expect a lot of price action happening over this level. So first of all, let's identify the weekly bias. At the beginning of the week, the order flow was in a downtrend, right? Prices creating lower highs and lower lows with a bias that price is gonna always move downwards. A lot of sell orders placed from the past week and at the beginning of this week, Monday, and prices creating order blocks. Couldn't trade past the previous high and create another lower low. Typically, we can expect a rejection from this level because if we looked in the higher time frame, price previously traded to this level. So we can expect that a lot of stop losses of those buy orders are placed in this area, right? So whenever price take out all of the stop losses and kick out all of those traders out of the market, we can expect high liquidity and volatility in the market, which can drive the price higher or continue its downtrend, right? So how we can identify whether price is going to move higher or lower? If we expect to see a rejection from this level, then we need to see a high pressure buy candle during one of the important trading sessions, whether London session or New York session. We had a rejection during London session and then another high pressure buy candle during New York session. Then we encountered a shift in the order flow, right? So instead of price moving down, creating low lows and lower highs with a bias that price is going to continue its downtrend. Now price is creating higher highs and higher lows with a bias that the price is going to take the higher high in the next move. Then whenever we have a buy model, if we formulate a buy model, then we can expect expansion in the buy direction and consolidation or some retracement in the sell direction, right? Which created the buy order flow. Bear also in mind that this is a liquidity void area. A lot of sell orders are scattered over this area and price never traded back to this area, right? So we can expect high rejection when price approaches this area. It's important to highlight the trading range because once we reach the upper or the bottom of the trading range, we can either expect a rejection or break through the area, right? And if there's a rejection, then price is going to try to move to the upper limit of the trading range or the lower limit of the trading range. In this case, price is trying to approach the upper limit of the trading range. And this is not a guarantee that price is going to continue to the upper limit of the trading range, right? But this is like the buy model or the buy bias. And if we see a breakthrough trading range, then we can see some consolidation to collect some orders in the sell direction. Over the last week, we had some important news, especially related to euro or dollar. One of the most important releases was S&P Global BME Composite. And for those who don't know, the PMI monthly composite reports on manufacturing and services are based on a large number of business executives in private sector manufacturing and services companies. And data is usually released on the third working day of each month, so each response is weighted according to the size of the company and its contribution to total manufacturing or services output accounted. And replies from larger companies have a greater impact on the final index numbers than those from small companies, So results are presented by a question asked, showing the percentage of respondents reporting an improvement, deterioration, or no change since the previous months. And from these percentage, an index is derived. A level of 50 signals no change since the previous months, above 50 signals an increase, and below 50 signals a decrease or contraction. So the actual numbers for this month was 47.6. So it's basically below 50. So it indicates a decrease or contraction. We also had an important release on Wednesday. which is the durable goods orders. And it measures the cost of orders received by manufacturers or for durable goods, which means goods planned to last for 3 years or more, such as like vehicles and appliances. And the final figure of this report shows the state of US production activity. And higher reading is bullish for sure for the USD and vice versa. So basically the actual numbers was 0, which is below than what was expected. So that's why these numbers enforce the bias direction of euro dollar, or that the euro is going to get higher versus the USD dollar. Also, one of the most important releases this week was the gross domestic product, or the GDP announcement for Q2 in US. And it basically measures the market activity because it indicates the pace at which a country's economy is growing or decreasing. And again, higher reading or like better reading than expected is seen as positive for the USD, where lower reading is seen as negative. Our numbers for this week was negative 0.6, which was higher than what was expected. What was expected was negative 0.8. So again, it was considered a positive reading for US economy. Also remember that sometimes market behaves in a completely nonsense manner. You sometimes see that there are some really good numbers for US versus the euro. However, the euro dollar is in a buy mode or in a bullish mode. Again, we are looking into these events to see at what exact times we can expect high volatility, we can expect high liquidity and price action. Also, we had an important speech today, Friday, 26th of August, at exactly 4 p.m. CET. And as I mentioned, we really look into these times because when we expect rejection or breakthrough an important level, we can see it during these times, right? Because we have now high liquidity in the market and we can expect high price action. And since this was a liquidity void area and price never touched this area before and a lot of sell orders are being placed, this drove the market way down. Please also bear in mind that we're now trading in an important area on the weekly range, right? Because the previous week candle break this market structure, right? And now we're trading back to this area. So this is really important area when it comes to rejection or that price is trading back and then we can expect further downtrend. So again, as traders, we're not looking to capture all of the moves in the market. And at the end of the day, it depends on your trading strategy and what type of trader you are. If you're a swing trader, for example, you're going to care more about the monthly, weekly, and daily chart, right? If you're a scalper, you're going to care more about the 5 minutes, 15 minutes, or 1 minute chart. And what we're doing right now is a top-down analysis. We're going through different charts, different time frames, and analyzing the chart, right? So let's have a look at the Bitcoin dollar. And again, for Forex, you can take any currency pair that's highly correlated with euro dollar and do the same or expect the same happening. For example, the pound dollar, you can expect the same is happening, pound yen, and so on and so forth. Same for the Bitcoin or any crypto. You can see the highly correlated crypto pair and then try to analyze it, and you're going to find that the same is exactly happening. So for the last week, this is our trading range for Bitcoin dollar, right? And obviously we're in consolidation phase, and whenever we are in consolidation, market is trying to build orders in both directions. Once we have the sufficient liquidity to break through the consolidation area in either direction, we're gonna see an expansion in a specific direction, right? So because it's a consolidation phase, we can see that the order flow is building orders in both directions. So we can expect that we have a lot of stop losses resting above this area and resting below this area, right? And also bear in mind that price didn't trade back to this area before, to this high pressure sell candle. And it makes more sense when we look on the higher time frame why price is actually consolidating specifically at this area, because we have a lot of buy orders that were previously placed at this level, right? And we can see a high pressure buy candle rejection from this area. So that's why price is trying to reach out to those stop losses that were previously placed by traders. And as we mentioned before, that whenever we have an expansion, we either have a slight retracement or a consolidation to build orders. And following a consolidation, there is another expansion, right? And we can clearly see that price created an order block at exactly 21,865K. Price traded to the exact slightly higher or slightly lower to a previous wick or candle, and then followed by a high rejection rate. Don't forget to check your charts over the weekend. It's really good opportunity for you to understand what went wrong, what went well, and how you can fine tune your trading strategy for next trades. Don't forget to comment down below which currency pair or crypto pair you would like us to analyze. And we're also having our weekly forecast on Sundays, so don't forget to watch them. Thank you so much, traders, for watching, and remember to trade safe.